The stock market is entering one of the most important weeks of the year. Investors are watching inflation data, Federal Reserve decisions, and major earnings reports very closely. Some analysts believe the market is preparing for another rally, while others warn a massive correction could be coming soon. In today's video, we're breaking down the biggest stock market news, the Fed's interest rate impact, top stocks to watch this week, and whether a market crash is actually coming. Stay until the end, because we'll also cover smart trading strategies professional traders use during volatile market conditions. 1. Market overview. Let's begin with the overall market situation. Over the past few trading sessions, the market has shown increased volatility. The Nasdaq continues moving aggressively as technology stocks react to interest rate expectations and AI-driven momentum. The S&P 500 remains near key support levels, while the Dow Jones has struggled to maintain bullish momentum. Investors are becoming more cautious because inflation remains stubbornly high in several sectors of the economy. Energy prices, housing costs, and consumer spending are still creating uncertainty for Wall Street. At the same time, many institutional investors continue buying selective growth stocks, especially companies connected to artificial intelligence and cloud computing. Traders are now asking one major question. Is this market preparing for another breakout, or is a correction around the corner? Historically, markets become unpredictable when inflation, interest rates, and geopolitical concerns all rise together. That's exactly why traders are paying close attention to every economic report released this week.
2. Fed interest rate impact. Now, let's talk about the Federal Reserve and why interest rates matter so much to traders. The Federal Reserve controls monetary policy in the United States. One of its biggest tools is interest rates. When inflation rises too quickly, the Fed often increases interest rates to slow down spending and borrowing. But higher interest rates can negatively affect stocks, especially growth companies and tech stocks. Why? Because companies become more expensive to finance, consumers spend less money, and investors move towards safer assets like bonds. That's why every speech from Jerome Powell creates major volatility across financial markets. Recently, investors have been searching for clues about future rate cuts. If the Fed signals lower interest rates later this year, many analysts believe stocks could rally sharply. However, if inflation remains high, the Federal Reserve may keep rates elevated longer than expected. That could create additional pressure on both stocks and cryptocurrencies. This is why traders must understand the relationship between inflation, interest rates, and market sentiment. 3. Market crash analysis. Now let's discuss the biggest fear on Wall Street right now, a possible market crash. Over the past few decades, major crashes have usually happened during periods of excessive speculation, high interest rates, economic weakness, or unexpected global events. Some analysts believe current market valuations are becoming too expensive. Others argue that strong earnings from major technology companies continue supporting the broader market. One warning sign traders are watching closely is declining consumer confidence. Another concern is slowing economic growth combined with rising debt levels. At the same time, smart money investors are becoming more selective about where they invest capital. During uncertain markets, volatility increases dramatically. Emotional traders often panic during sell-offs, while experienced investors focus on long-term opportunities. It's important to remember that corrections are normal in financial markets. Every bull market experiences pullbacks. The key difference between successful traders and emotional traders is discipline, patience, and risk management.
4. Top stocks to watch this week. Let's now look at some of the top stocks traders are watching this week. First is Nvidia. Nvidia continues dominating the artificial intelligence sector, and investors remain extremely bullish on AI-related growth. Strong demand for AI chips and data center technology keeps pushing Nvidia into the spotlight. Next is Tesla. Tesla remains one of the most volatile stocks in the market. Traders are closely watching vehicle deliveries, profit margins, and Elon Musk's future AI and robotics plans. Apple also remains important this week. Investors are monitoring iPhone sales, services revenue, and the company's AI strategy moving forward.
Microsoft continues benefiting from cloud computing and artificial intelligence partnerships. Many analysts believe Microsoft remains one of the strongest long-term technology investments in the market today. Finally, Amazon remains a key stock to watch because of e-commerce growth and Amazon Web Services performance. If market sentiment improves, these major technology stocks could lead the next rally. 5. Breaking news trading strategy. Now let's discuss how professional traders react to breaking market news. One of the biggest mistakes beginners make is trading emotionally after major headlines appear. Smart traders wait for confirmation before entering positions. They analyze volume, momentum, support levels, and overall market conditions. Risk management is extremely important during volatile markets. Professional traders always use stop losses and position sizing to protect capital. Another important strategy is avoiding overtrading. Many beginners lose money because they chase every market move without a clear plan. Patience is one of the most valuable skills in trading. Successful traders focus on probabilities, not emotions. Remember, protecting your capital is more important than making fast profits. The stock market is entering a critical moment.
Inflation, Federal Reserve decisions, earnings reports, and global economic conditions will likely determine the next major market move. Whether the market rallies higher or enters a deeper correction, smart traders stay disciplined and informed. If you enjoyed this stock market analysis, make sure to subscribe and turn on notifications for more trading news, investing strategies, and weekly stock breakdowns. Thanks for watching, and we'll see you in the next video.